Unfortunately, it looks like we're creeping towards the eve of financial collapse. We'll talk about what that collapse will look like as well. Max Kaiser.
Hey, Alex. Yeah, well, nice to be on again, and thanks for coming on my show. And I think you describe it well, creeping toward the exits. And this is what the German gold repatriation story is all about. And as you point out, the central banks have lost trust in each other, and they are taking their gold out of banks in respective vaults around the world, and they're bringing it all home. And they're doing this in a way that will precipitate and accelerate this collapse that we've been talking about. And to give you an idea for how this all works, in Britain, for example, the government says they have 300 tons of gold here in Britain. But my sources tell me that they have leased out or sold over 1,000 tons. So we have a fractional gold standard around the world that is keeping these central banks afloat. And now that they all want their gold back, they find out that the gold's not there. Back when Germany took 900 tons from Britain back during the 2000-2001 period, Gordon Brown, to satisfy Germany's demand for gold to be sent back to Germany at that time, he ended up having to sell 400 tons of Britain's gold. So Britain had to sell 400 tons, and that's about well over $1 trillion now that he gave away, because the price of gold at that time was $250 an ounce. Now it's $1,700 an ounce. And this is a problem going forward. The Netherlands want their gold, Germany wants their gold, China is buying gold. But these central banks that say that they have gold, it's turned out that they actually leased the gold, which is a way for them to put on their books that they still own the gold. When the Fort Knox, for example, when they lease the gold, they claim that that is as good as owning the gold itself. But if you were to audit Fort Knox, you would find that most of the gold has been leased, and that means sold. So when people come then to claim their gold, they find that it's not there. The Bank of New York, when Germany says that they want the gold over 7 years. Well, as the panic in the gold market builds, they're going to want that gold a lot sooner, and they're going to be told that we don't have the gold to give you because we sold it.
All right, I want to stop you right there because, Max, ad nauseum for about 2 years in almost every interview, so there's probably 20 of these, you have said that you'll know that it's about to collapse when they start demanding gold from Britain and from the U.S., and that they've leveraged it at least 10 to 1 in fractional reserve, and that it's the fraud of the silver and gold reserves that will finally bring them down, and that they want to have a controlled collapse without this happening, but that if they do go for the gold and silver this way, that's a signal that things are out of control. Now you've said that over and over and over again, and my guests do this all the time because we have guests on that are right. They could have guests on that were right on national TV here, in mainstream news, but they don't want you to be right. They don't want the slaves to know what they know. But, Max, you're scaring me because you've said this over and over again, that this would be the sign. And now it's not just Germany demanding the gold from the U.S. and England and places. This is really scary. So you've got the floor till we go to break in 5 minutes. Break down how you knew this was coming and what this signifies and how you think they'll satisfy it this time.
It started really back in 2008, on March 17th of 2008. Stacey Herbert and I, we were making a documentary. We were in Frankfurt, Germany. We were at the Bundesbank, and we were talking to people at the Bundesbank. And this was right when Bear Stearns was collapsing and gold shot up above $1,000 an ounce. And we ended up there at a very historic moment. And I asked, I'd like to see the gold. And the response from the Bundesbank was, well, most of it is in New York. Now, that film was later broadcast on Al Jazeera English, and it was a shock to the people in Germany. And another journalist named Lars Scholl picked up the ball, and he's been hammering journalists and bankers now every year for 4 years until the point where Bundesbank came out and said, due to the popular pressure, we have to admit that we have these huge gold positions held in the New York Fed, and we're going to now repatriate this gold. We're taking the gold back And then my sources tell me that the New York Fed said, well, we don't want you to start a run on the gold market, so we're going to space this out over 7 years. But this was really going back to what we discovered in 2008, which is that the gold that these banks say that they have, they don't have. And this set off a fire, a trigger. Now, over the past 4 or 5 years, what you have is central banks and governments to keep the economies afloat have been aggressively buying their own bonds. They call it quantitative easing. And, your other guests talk about this, like Gerald Celente talks about this a lot. They buy their own bonds as a way to keep interest rates low or to keep bond prices high. Now, here's an amazing statistic. The bond price in America has not been as high as it is today in the 240 years that America has existed. The bond price, the government bond price in the UK and Britain has not been this high since 1694, when the Bank of England was created. The bonds are where the dot-com was in 2000. It's where the stock market was in 1987. It's where the real estate market was in 2005. It's at a historic peak, at a bubble peak. Now, whether the bonds collapse between now and April, as I predicted on your show last year, it could happen. I think it could happen. I might be wrong, but I won't be wrong by much. I could be wrong by a few weeks, a few months. But that's what we're going to see. We're going to see bonds collapse. We're going to see gold now, panic buying in the gold market, taking gold a lot higher. And, of course, this all ties in to what we launched on your show 2 years ago, Crash JP Morgan buy silver. The price of silver was around 26. At that time, there was such a furor to buy silver. It moved up to 50, pulled back now to the low 30s. But now we're seeing the price of silver after this consolidation period. Now looks like it's going, along with gold, you're going to see new highs in silver. So silver will get over $50, $60, $70 an ounce. But those are individuals now who don't trust the banking system, not just governments. And for individuals, they reach for silver because it's a lot easier to get. It's cheaper.
And Max, the public here going to break, they're all buying survival goods, shelters, guns. They're voting with their purchases showing they don't trust the system. The elites are all buying armored redoubts and getting bodyguards. They don't trust the system. This looks like quite a mess we're going to enter.
Well, there's a good point you're making there, because it's to contrast today with the 1930s. People say this is similar to 1930s. There's a big difference between now and 1930s. In the 1930s, there was a liquidity problem. Banks needed cash to keep their business going for their deposits. But today, that's not the problem. The problem is an insolvency issue. These big too big to fail banks, they are technically insolvent. They're zombie banks. They're being kept alive with this money printing that the politicians tell us, well, we need to print the money. We don't want to repeat the mistakes of the 1930s. That's false. It's not like the 1930s. It's not a liquidity issue. It's an insolvency issue. And they're keeping the banks alive with this cheap money and 0% interest rates to keep their buddies afloat.
All right, stay there. Going back to Max Keiser of MaxKeiser.com. What does the next stage of collapse look like, and what will happen?
Well, I'm just reading Zero Hedge. They got a story up right now. Mervyn King, Bank of England, is talking about rebalancing to avoid a currency war, and that's a big moment, because he acknowledges that we're in a currency war. The UK pound is going to have to be revalued down sharply. That means purchasing power in the UK is going to collapse. As you know, I moved to London from Paris to observe and to report on the collapse of the UK pound and the UK economy, because it's one of the most vulnerable economies in the world, because they have so little gold after Gordon Brown sold most of it back in 2001. So this is another shoe to drop. This is another chapter in the collapse of these paper money empires. And of course, gold and silver are acting fantastically well so far this year, and it's just playing out exactly as we said it would over the past couple of years, and 2013 looks to be a continuation.
So looking into your crystal ball, things are right on schedule.
Pretty much. I see that the economy, that growth needed to pay the debt, is a quantity that will never come to pass. And I'll give you a good example of how to determine that. The amount of debt in the world or even in the U.S. with its many, many trillions of dollars of debt. But to pay that debt off, it would, of course, be a subset of the tax being collected on growth. Okay, so how much tax and how much growth would be required to pay the debt? Well, all growth in the modern economy is tied to oil. And if you were to burn 1 trillion barrels of oil, approximately the same amount of barrels of oil that have been burned so far in the last 100 years, if you were to burn another 1 trillion barrels of oil, you would not generate enough taxable income to pay off the current debt. That should give you an idea of how much debt there is. So, in other words, this debt is never going to be paid off. Jobs are never coming back. Wages will continue to crash, and the bond market collapse is coming, and gold and silver are going to go a lot higher. There's just no way around it.